Hello, fellow ghost traders. The week is 9/23 of 2023 and time for the weekly market update. September is certainly living up to its reputation of being a perennial spoiler for the market. All three major indexes are headed for losses this month, with NASDAQ leading the charge by more than 5%, the S&P down 4%, and the Dow Jones slipping 2%. And it appears that all three indexes and individual stocks have further to fall, despite the VIX continuing to underperform and reflecting that concern as it currently sits at a neutral 17. There's a lot of investor angst out there, bolstered by last week's comments by Chairman Powell, stubborn inflation data, labor strikes in the auto industry, geopolitical turmoil, and a possible government shutdown. The CNN Fear and Index Greed sits with a healthy bearish bias. As we get closer to the debt showdown, we could see a possible doubling of the VIX in response. The government shutdown itself may not hurt the markets, but it could cause a concern over the non-release of critical economic data, which many market movers rely on to make financial decisions that do impact the markets. While it is certainly possible that all this turmoil sets the stage for the Federal Reserve to scuttle their plans for more rate hikes this year, don't hold your breath. The Fed is heavily focused on creating a soft landing for the markets, with inflation being the greatest threat to accelerating that drop on the hyperbolic overreaction. Looking at the markets overall, even with all of this bearish news, the markets is more interested in taking profits off the table more quickly than it is in escaping the market completely. Many recent examples of this are the massive gap and trap experienced by NVIDIA earnings a few weeks ago. However, this trend seems to have started as early as June, with the same gap and trap occurring with John Deere and their stellar Q2 results. Adobe earnings show heavy signs of fatigue, whose market beat celebration took a quick turn down Depression Alley as the stock dropped on the good news. The major indexes haven't been able to sustain any type of a rally, watching most days incur an end-of-day to end-of-week sell-off to complete the profit-taking. This all appears as a hedge your bets, and let's see what the near future brings for most investors in the market. The major upcoming earnings for the week are Cintas, Costco, Micron, CarMax, Nike, and Carnival Travel, reporting Tuesday and Thursday respectively, and we'll see if that trend of taking profits continues. Major news in the coming week: Tuesday we'll see a flurry of reports, including home price index, consumer confidence, and the new home sales report. Wednesday will release the durable orders report. Thursday we'll see second quarter jobless claims, GDP update, pending home sales, and Friday will round out the week with the personal consumption, expenditure, and personal income reports. For the nth week in a row, we retain our bearish bias while also noting that profits should be taken quickly and positions held to short expirations. Additionally, watch for oversold situations creating technical bounces across many stocks this week, and we may even see some life from the big seven stocks who have been struggling lately, especially Tesla. While the struggles of these tech stocks are real, keep in mind technicals that will create a retracement. As always, we will be trading with our Ghost Trades community on Thursdays and Fridays. All our trades did well last week, including NVIDIA, CVNA, Goldman Sachs, Carvana, Lulu, Federal Express, and Airbnb, and even Tesla, although Tesla gave us a bit of a scare at closing, dropping like a rock in the final hours of Friday's market. That's it for the update. Enjoy your trading week, fellow Ghost Traders, and we will see you in class or on the market battlefield. Now go out there and make today your masterpiece.